Hello and welcome to the Weekend Investing Daily Bite of 22nd of November. And what a day it was. Nifty surging by more than 500 points. We have been discussing this last few sessions that market is oversold. Market has not seen a bounce for almost 8 weeks now. And the fact that yesterday's shock of the Adani news was a stress test for the market. And when markets didn't fall much yesterday, it was very clear that there's not much room on the downside. But today's nice 500 plus point move has soothed a lot of nerves. Of course, we are still to navigate the outcome of Maharashtra elections, which will come out tomorrow, and Monday the markets may react to that. So let's get into the video. Today's the topic of discussion is on IPO investing, whether it's a gold mine or a dangerous gamble. Hopefully, this will open some eyes of some investors who consider it as a gold mine. Disclaimer, please do read all the disclaimers. It is for your own benefit. Do subscribe to the channel, do press the bell icon, and let's get on with the market. So you can see here exactly where the top of the previous election day high was. That was the support all this while. It did try to go below the support yesterday. It closed very near that. And today it really bounced very hard. So today's bounce, the close at 23,907 is actually a 7-day high close. You can see the previous six candles, the close was lower than today. So as I was mentioning, always look for at least a 2-day high close. So let me just give you the example here. Since we have been falling, there were only two instances of a 2-day high close. So there was no 2-day high close here. There was no one here. And this one was the first close, which was above a 2-day high, but it was a false alarm. It broke down. And today is the next one. So always wait for at least a 2-day high before you are starting to, get on with any long strategy. That is one thumb rule that you can use on any chart, and it will work mostly. It is not a rocket science, but it's a good higher probability outcome whenever you will see. You can see on previous occasions also, market falling here, no 2-day high, one 2-day high, and market goes up. Then of course it cracks, then another 2-day high, market goes up. So this is a precursor to a a good bounce. At least I don't know if we will bounce very hard beyond uh, this average or this high yet, but it does look like a strong bounce at 2.39%. I think the last time we had a 2% plus move was here near the election day. So we've not had a 2% move since June of 2024. Nifty Junior also moving up almost 2%, 1.8%, but not making it to a 2-day high. Adani stock still in Nifty Junior, not allowing that to really come out of the hole that they've dug themselves in. Nifty mid cap up, but not like Nifty. Mid caps up 1.15%, but good chart, having taken the support of the election day high here as well. And on small caps, there's a minor move at 0.98%, still within the range of this long uh, move down. So yet to really break out, but just simmering around there at 0.98%. Bank Nifty had a good move at 1.51%, coming back to this breakdown point. So overall, I think most charts are looking all right. And depending upon the outcome of Saturday's poll result, we will see more on Monday. Momentum trends, declines 113, advances 382, heavily in favor of advances today. FII trends, month till date, still quite a damaging minus 40,000 crores. But today's data, I think, will be important. I think once we get today's data of 22nd November, it will be interesting to see whether this 500-point rally FIIs participated there or not. But yesterday, on Adani News, there was no exceptional selling. I mean, they have been selling 3-4 thousand crores almost on a daily basis. So this figure was not 10 or 15,000 crores because of the news of Adani. So that does say that the confidence of the FI in Indian market uh, has not changed as such. I mean, if they are gradually selling, that is okay, but it's not like that they're throwing the towel at it. So good 4,200 crores bought by DIIs yesterday. And if you see the monthly figures so far, it's almost even. 39,600 crores sold by FIIs, and DIIs have picked up 35,800 crores. Heat maps are all green today. You can see Reliance jacking up 3.4%, SBI 4.5%, TCS, Infosys, Titan, Levers, ITC 3.8%, you name it, and the stock was up. So it could be a dead cat bounce, but it's a very nice dead cat bounce that is happening. Nifty Next 50 also had stocks like PFC, REC, PNB, BHEL, HAL, Ambuja Cement, LTIM, Naukri 6%, DLF 3.8%. These all were doing well. You had some slippages in Adani stocks again, but and as well as Varun Beverages, Zomato, uh, and JSW Energy. Sectoral trends all green. Pharma and private bank the least at 1%. IT and real estate gaining at 3.3% and 3.2%. So IT, real estate, and PSU banks have been able to come out of the monthly losses, and they're riding the green. Uh, let's see where this goes, because today was an exceptional day. You can't really make out whether today's move was basis the entire market move or something exceptional was happening in any one sector. But IT definitely is looking very, very bright going forward. You can see that IT chart is also sort of breaking out from this consolidation, up 3.29%. All the IT stocks listed here also doing quite well. TCS after a while in a big move upwards at 4.2%. Stock spotlight is on Raymond. So Raymond's was up 15.8%. It corrected quite a bit from 2,300 to nearly 1,300 odd, and now it has started a journey up, perhaps up 15.8% on the longer chart. It has been very, very choppy, but since 2020, it has had a linear run from 200 rupees to nearly 1652 now. So let's discuss about IPOs, whether a gold mine or dangerous gamble. So this was my tweet that if somebody had missed, let's say Ola Electric, and they were ruining not having got the IPO allotment, I mean, you can buy as much as you like. It is at 68 rupees, much below where it listed post the IPO. So, no damage done if you lost that opportunity at that point of time. This is another one, Honasa Consumer. This is Mama Earth, and they are singing the Mama song here. It's down almost 60-70% from the recent highs, and no love is lost if you had missed the IPO for this stock. You have ample opportunity to buy the entire company out if you like. 197 Paytm, classic example. Last 2 years, it collapsed from 2,000 rupees to nearly 300 odd, and now, of course, in the last few months, it has done well. It has recovered from 300 to nearly 900, so that is very encouraging. But it has taken a long time, almost 3 years since listing. And if one is gung ho about this company for very long term, might as well buy it now rather than at the IPO. Nika, another high profile listing. They will make all kinds of claims at the listing time, because time and again, and I may sound repetitive, but I've told you this again and again. Please understand why companies come to the IPO. When companies come for IPOs, they are looking to maximize the promoter, the uh, pre-IPO investors, the merchant bankers. They are their whole aim is to maximize their outcome of their sale of their holding. That is the whole aim. So if sharks like them are trying to maximize, I mean, what chance does the retail have? I mean, very little. So whenever you will find that markets are running in some sort of a blind bull run, it is an easy target. I mean, you have a great, brand name. You come to the market, people will look at the brand and just buy blindly, and then you can offload your stock. So this is a classic example. I don't know where this will go further down, but always allow an IPO stock to settle down, and then take a bet on it if the formation on the chart is positive. So this is Nika for you, 168, and it had gone to 425. Fino Payments Banks, another one which has recently risen from 200 to 400, but now coming back again at 330. Again, no gains for IPO listed investors. Star Health is another one. 2021 end listing down from 900 rupees to almost 459 already, so 51% down. So a lot of pain uh, is sort of available if you really want to get it, and you can blindly start applying in IPOs and you'll get that pain as much as you like. So always be very, very selective. Only, and I can assure you that IPOs that are really good, and they're coming at the right price, it's like a lottery ticket. You will not get it. And even if you get it, the allocation will be so small that it will make a meaningless difference to your entire portfolio. So a lot of effort goes into IPO buying and filling the form and doing the submission and blocking your money. But most of the time you will find that only in blind bull runs will you really make money on the IPOs. The important statistics that you may want to see is that of all IPO buyers, 68% exit in the first week itself. 68%, and 70% exit in the first month itself. So what is this IPO business? It is basically flipping the coin. Uh, Retail investors also 52% exit in 1 month. So people talk about long-term investing and brands and this and that, but they get out in the first month itself. So know why you're getting into an IPO sort of situation. If you are flipping the coin, if you're just taking a bet, then it is fine. I mean, then 50% down also in a month should not bother you, because you were going for all or none. I mean, either you'll make few multiple times, or you'll lose your money, or that kind of a thing, or most of it. So it is a gamble. It is a gamble with a covering of a very nice story. Um, IPOs are often seen as ways to make quick money, but I think there are much better ways of making quick money in the markets if you are taking that kind of risk. Allotments are small, potential gains are usually minimal, and such limited returns do not make really any impact on your long-term financial goals. If you have an itch that, I want to do something and make some quick 2-5% on my capital, then maybe, this is good. But uh, I mean, you can come and play options in the market. I mean, if you have to play with your money, you can do that. So, and also once IPO is out, people will look at that. It is out there in the public domain. The results will come out in the public domain. Analyst reports will be written on it. So it usually stocks will mellow down after an IPO listing, and then you can possibly have a better outlook of that stock for the years coming together. So uh, initially, post IPO stocks tend to be very, very volatile, and of course, it makes it very, very risky at that point of time. So allow them to settle and show a sustained price momentum. For instance, Zomato is a classic case. It listed very good, fell down dramatically from 150 rupees to almost 50 rupees, and then there was a nice price discovery and a trend from here. So even if you bought it here, like many of our strategies did, you would have ridden a nice trend post that without the agony of having to see your capital go half. Okay, so these are some good sort of practices that you can bring in your investing that can avoid pain in your journey. Our main thesis is that you must avoid pain in your journey. Why should investing journey be painful? So always remain with stocks that are doing well. Don't get into stocks that are doing worse. If stocks start to do bad, get out of them. Stocks are doing well, stay with them. That is the whole thesis. So what has been your experience with IPOs? Please do write in the comments. It will be great to read them. I will see you in the next episode. Thank you so much for watching. Do like and share these videos with your friends, family, and colleagues, and do subscribe to the channel. Thanks. Bye.